that capture $1 billion.
Thanks for joining us on Parlance. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get you the headlines. Indian markets erase morning gains due to heavy selling pressure in most IT and metal stocks.
Mutual fund managers are managing more money in Indian equities than insurers. For the first time ever, fund houses have 9.3 lakh crore worth of assets under management as compared to 9.2 lakh crore under insurers.
The telecom department, seeking 2,900 crore in bank guarantees from Reliance Communications, says it won't allow the deal with Reliance Jio to go through without the guarantee.
Theresa May gets the European Union's nod for her Brexit deal. Will now have to try real hard to convince the UK Parliament and her cabinet colleagues.
All right, all that coming up, but let's do a check on the markets. Neeraj is here as always. Afternoon, Neeraj.
Afternoon, guys. Well, 0.25% higher, not at the highest point of the day, but not at the lowest point of the day as well, if that is any good news, but really just meandering along today. The equity markets, the banks may be doing okay, but all of that is being thwarted by the kind of moves that are happening in IT as well as the metal space, as the headline suggested as well. So Nifty IT is convincingly below the 200-day moving average as an index, and a clutch of those names are sub the 200-day moving average as well. It may have bounced back a little bit, but at the current levels as well, the Nifty IT is just around or below the 200-day moving average numbers. So do watch out there. I don't know if the IT move has also got to do in part with how the currency, which started off very strong and then has weakened, might have a role to play there as well. But interestingly, the top gainer today is Hindustan Unilever. That stock is up about 3% in trade the last time I checked, which was about 5 minutes ago. So really strong move for HUL, trading in at the high point of the day and almost reverting back to the valuations that it was trading at, which is about 55 times or thereabouts 1 year forward. So HUL is making a really good move today. Yes, Bank, and I'm sure maybe Ira will speak a lot more about it, but yeah, I think that stock has taken a bit of a stick today. Fairly high volumes compared to averages as well, but 5% down, and it stayed 5% down for most part of the trading day today. So that's the other one that you need to monitor. And then select mid caps on news or otherwise might be doing okay. Aviation, for example, or select paint companies, because of the crude price fall, have done reasonably okay, but all of them have come off from the highs that they started off with.
Interesting that. But now's a good time for equity investors to bet on the Indian election results. That's according to FundsIndia. The investment platform advises investing 5 to 6 months before the elections to profit from the volatility. Nupur Acharya from Bloomberg News spoke to the head of the mutual fund research at the firm. Nupur, thanks for joining in. What's the rationale? Why is now a good time?
Well, after cricket, it is the elections which will trigger heated discussions right from your roadside tea stall to even the boardrooms. And that's this volatility is exactly what FundsIndia is saying is the thing to capture right now. So, you know that the FPIs are on the sidelines. Most of the things are uncertain. So this is the right time to enter and buy. And they have evidence to support that. So if you had invested in 2013 and the following elections, 6 months before the polls, you would have captured this volatility, and you have made anything 3% to 6% over and above what the benchmark delivered. So if you believe that the government will continue, okay, you have a portfolio to invest in that, the cyclicals, manufacturing, transportation, logistics. If you feel a new government is coming, you have, of course, the defensive stocks again, consumer, which is a story for India, and also MNCs. So you can invest in either of the portfolios. In the long run, over 5 years, you will find that you have earned more, and more or less the same, even if you go with with the defensive stocks, or even if you go with the cyclical stocks.
Does FundsIndia have a preference on mid-cap versus large caps?
No, nothing like that. They're just saying you vote right now before the election, even elections come. You can vote for a portfolio.
All right, thanks so much for that, Nupur. For the first time ever, mutual funds are managing more Indian equity money than insurers. The recent stock market rout has erased the gap that started narrowing after demonetization and leveled the playing field between the two modes of investment. Sajid Manga joining us with the details. Sajid.
That's right. The mutual funds are now having a more bigger say in the Indian equity markets as compared to insurers. If you look at the latest data as of October 2018, what it says that the amount of assets under management in mutual funds have surpassed insurers for the first time ever. Mutual funds are sitting on assets for 9.32 lakh crores as compared to insurers of sitting on 9.22 lakh crores. Now, what is important to note here is that since April 2016, the trend has been diverging in the sense that their mutual fund assets under AUM under mutual funds are growing at a much faster pace as compared to AUM under insurers. And to give an example is the amount or the percentage of AUM to the total equity AUM there. Mutual funds had roughly around 11.1%, and they have grown to nearly 15.5%, whereas insurers had nearly 17% of assets in equity. Now that has come down to 15.3%. So that gives you an idea of the kind of trend reversal which has happened over the last 2 years, especially after demon, where you saw a lot of retail money going into insurance and mutual funds. And that's the time also when we saw on a monthly basis you've seen a lot of SIPs coming in, and today you have nearly 6,000 to 7,000 crores of inflows coming in only in form of SIPs into mutual funds as compared to insurers. One more divergent trend which has come in is in the month of October, where we have seen that insurers have AUM of insurers have gone down by nearly 40,000 crores as compared to mutual funds, which saw nearly 29 crores depletion in asset values, and that could be one of the reasons. The reason being that it could be sell-off which is happening from the insurers, and likely that LIC being the biggest player in the insurance sector, LIC may have sold in the market, as a result of which the asset under management has come down by nearly 40,000 crores in the month of October.
Sajid, thank you for that. Let's move on. The collapse of oil prices is driving India's sovereign bonds to their best quarter in more than a year. The benchmark bond yields hover near the 7.8% mark as rate hike expectations ease with the cool-off in oil prices. Karthik Goyal of Bloomberg News is here with a closer look of what's really going on. There has been a clear turnaround map with what's happening with oil prices, but what's the market looking like, and what is it factoring in?
Yeah, thank you, Harsha. Yes, as you rightly pointed out, the main reason has been the big collapse in the oil prices, which has engineered this complete U-turn in the bonds. Bonds declined in the previous 5 quarters. This is the first quarter when the bonds will be rising. Mm-hmm. And what's happening is, with the collapse in oil prices, the rupee has appreciated, and inflation has also cooled down to the lowest in 13 months. So what has done is that the market, which was expecting a very hawkish stance on the monetary policy from the RBI, there has been a complete turnaround on that. So as compared to a month ago, when the market, when the RBI changed its stance to calibrated tightening, and the market was also penciling in rate hikes, now they've gone soft on that. They're expecting at least the RBI will be on a long pause in the coming policy meeting, and hence and also in the upcoming meetings. Another very big factor that has contributed to the positive outlook on bonds is the RBI's OMO bond purchase program, which has created demand for the government bonds. That is also kind of supporting the sentiment.
All right, Karthik, thanks so much. A turn reprieve for bond investors there. Moving on to corporate news, Bharti Airtel has appointed 7 banks for the proposed IPO of its Africa business. The telecom operator, which plans to take the Africa division public by the middle of next year, had said it's eyeing more than $4.5 billion from the primary markets, most of which will go to pair debt.
Let's move on. The Telecom Department has reiterated its demand for 2,900 crore bank guarantee from Reliance Communications. The government today informed the Supreme Court that it won't allow RCom to sell its assets to Jio unless this guarantee has been provided. Arpan Chaturvedi, who was in the courtroom, now joins us on the phone line. All right, we seem to have lost that line with Arpan. We'll try and come back to him in just a short while.
All right, let's talk about Reliance Jio, though, in the meantime. They've started to make inroads into non-metro cities. The country's newest telecom operator is banking on its 4G-enabled Jio phone to increase its presence outside the cities identified by the telecom regulators as metro. Those include Delhi, Mumbai and Kolkata. But the tariff war is surely taking a toll on revenue and hurting the industry as a whole. Samit Sarkar is standing by to take us through the numbers. Samit.
So if you see, the Reliance Jio's tariff plans and Jio phone have help the company garner more revenues from non-metros. Now, if you see Reliance Jio's adjusted gross revenue from metros, that is from Mumbai, Delhi and Kolkata, they have remained flat compared to last quarter, but it has seen an 18% rise when it comes to the non-metro circles, and that is very high compared to the previous quarters. Now, for its rival, that is the other two private telecom operators, Vodafone Idea and Bharti Airtel, they have seen exactly opposite trends. In metro circles, Vodafone Idea's revenue has increased by nearly 5%, while that of Bharti Airtel has increased by nearly 18%. But when it comes to the non-metro circles, Vodafone Idea's revenue has declined by nearly 10%, while that of Bharti Airtel has declined by nearly 2.2%. Now, the key data set, that is the revenue market share. Now, Reliance Jio's revenue market share has continued to increase for the 4th consecutive quarter, and now they control nearly 1/4 of the revenue generating telecom market. Now, in the second quarter, Reliance Jio's revenue market share was close to 26.2%, while that of Bharti Airtel and Vodafone Idea have declined now to 32.8% and 31% as of second quarter of financial year 2019. Now, if you see, since when Reliance Jio had started reporting its numbers, it has garnered most of its revenue market share from Vodafone Idea. It has got nearly 9 percentage points of its revenue market share from Vodafone Idea, while from Bharti Airtel it has got nearly 3% of its revenue market share since when the company has started reporting its numbers. Now, if you see the adjusted gross revenue, now for Vodafone Idea it has been declining for the last 1 year on an average by nearly 6 to 7%. For Bharti Airtel, after increasing in the first quarter of financial year 2019, it has again declined in the second quarter by nearly 3%. For Reliance Jio, after seeing a slowdown in its growth in the last 2 quarters, it has again picked up in the second quarter. In the second quarter, the adjusted revenue growth was nearly 16%, as against a 14% growth rate reported by the company in the first quarter. While for BSNL, the adjusted gross revenue has declined by nearly 17% after increasing 7% in the first quarter of financial year 2019. Now, if you see the telecom sector as a whole, the revenue of the sector has declined in the second quarter of financial year 2019 after increasing marginally by 1% in the first quarter. In the second quarter, the telecom sector's revenue was close to 31,900 crore rupees, a decline of nearly 1% compared to last quarter.
Soumen, thank you for that. Let's get back to the story on Reliance Communications. The telecom department has clearly stated at the Supreme Court today that it won't allow the Arcom Jio deal to go through unless Arcom provides a 2,900 crore bank guarantee. Arpan Chaturvedi, who was at the court, joins us on the phone line with more details on what transpired. Arpan.
That's right, Harsha. So this petition had been filed a while back in the Supreme Court, and the case came up today in front of the bench of Justice A.K. Sikri and Justice Abdul Nazir. What the case here is that the government is saying that that Arcom owes them some spectrum dues, and for that they are seeking bank guarantees before they allow the transaction to go ahead. Arcom also took a stance in the court. What they say that with this approach of the government, it will affect the deal, and if the deal doesn't go through, then nobody would be getting any money. The banks will lose money. As of now, today, the court has not issued a notice, which means that it has not formally agreed to hear the case. No notice has been issued to any of the parties yet, but the case will now come up in front of the bench tomorrow when Justice Sikri's bench will take up this matter, and we will see what happens to this particular petition by the government seeking a bank guarantee of 2,900 crores to allow the Arcom and RGO deal to go ahead.
All right, Arpan, thanks so much for that. The government has said that it will review the decision by some airlines to start charging for all web check-ins. The Ministry of Civil Aviation put out a comment on its Twitter account saying that it is reviewing such services and whether they fall within the unbundled pricing framework. Indigo replied to an air traveler's tweet over the weekend saying that all selected seats are now chargeable. Consumers can no longer web check-in without selecting a seat. Social media is completely abuzz with that story. And what its implications for consumers are.
UK Prime Minister Theresa May is ready to stake her political future on the Brexit deal that she's cracked with the European Union leaders. May is now headed for a campaign to win support back home in a crucial parliament vote before Christmas. Bloomberg Kathleen Hayes reports.
It's a very difficult battle because there are problems on both sides. At the presser following the agreement just signed with the EU, she said she's going to take it to the House of Commons, confident she can get it through and ready to wage that campaign. Let's hear what she said.
Before Christmas, MPs will vote on this deal. It will be one of the most significant votes that Parliament has held for many years. On it will depend whether we move forward together into a brighter future or open the door to yet more division and uncertainty.
Now, many on the European side, like the Dutch Prime Minister, Mr. Rutte, saying, you know, if there was any better deal, Theresa May would have gotten it, you guys. She was stubborn. She was tenacious. And many of them expressed the hope this deal can go through, including the head of the EU, Jean-Claude Juncker, saying about Brexit, it's the best deal. It's the only deal for Britain. Let's listen to what he said, because this does seem to be the sentiment overall.
Those who do think by rejecting the deal that they would have a better deal will be disappointed in the first seconds after the rejection of this deal.
Yes, and of course, head of the EC Commission, Mr. Juncker, his voice, very important in this whole debate. Conservative Eurosceptics in her own party, they hate the deal. For one thing, they say it forces the UK to remain under the EU's trade rules for too long. Angela Merkel saying she's sad about this Brexit divorce. Theresa May said she's not sad. However, she did not answer questions asked by reporters about what happens if the deal doesn't pass. Would you consider stepping down? She is saying she's much more focused on just getting this deal through. But clearly, if this vote is, if the deal is not passed and this has to go further, would it be a general election? Second referendum, people are talking about too. But right now, Theresa May is not talking about any of that, understandably. She's saying, I'm going to get this done.
Saudi Aramco looks to balance its upstream and downstream operations and become an energy powerhouse by diversifying focus into CNG and chemicals. The ambition is backed by about $500 billion in investment over the next decade. Aramco CEO and President Amin Nasser spoke exclusively to Bloomberg News. Listen in.
We always look at the long term. We never plan based on a short term. And so far, in our view, the demand is healthy. We're looking at between 1.3 and 1.4 this year of additional demand. Next year will be also the same in terms of additional demand. We are crossing the 100 million barrels. So there is a lot of healthy demand in our industry. We're not looking only at oil, we're looking also at gas and LNG, at chemicals. So there is a lot of growth potential for Saudi Aramco as we are trying to balance our upstream and downstream. So a lot of growth potential for Saudi Aramco.
Let's talk about one of the projects you're very excited about, the acquisition of the stake in SABIC. It's likely to be the biggest acquisition of its kind in the history of the Kingdom of Saudi Arabia. You're considering a wide range of financing options. We understand that much, including a bond issuance possibly. When would you like to make a decision on the financing?
Well, we are in the middle of negotiating now and doing the due diligence with the Public Investment Fund, who own 70% of the stock in SABIC. So it's a process that is currently ongoing. As soon as we complete negotiation with the Public Investment Fund, and we hope that will happen soon, we can progress to the next step, which is getting the antitrust requirements in different countries. As you know, there is an antitrust requirement before we can close, and that would also require certain times for it to close.
Let me run you through a theory that's sort of making the rounds with some of the key analysts. You've got the acquisition of this stake, which makes perfect sense from a business perspective. You sort of beef up your downstream ambitions. Does that make a downstream listing, a downstream only listing, a possibility?
At this stage, we're looking at integration more than anything else. As I said, a company that is both upstream and downstream with more integration would be worth much more. Integration will add value. It will be very difficult to separate the two because they go together. If you look at any refining asset today, what are we doing today? If you look at our asset with Total, in Saturn, in Jubail, 400,000 barrels, 440,000 barrels refining. What did we do just recently? We are putting almost $10 billion to expand into petrochemical. The same asset. If you look at our Motifa assets, which is basically a refinery in the US, we are basically putting also $10 million to integrate more into petrochemical. So basically, you're looking at all of these assets when we look at our crude oil to chemical, basically you're looking at more integration. So a company that have more both upstream and downstream will be able to balance the volatility in the market.
There's a bit of skepticism among investors, to say the least, about your IPO ambitions because it's been delayed a couple of times now. 2020, 2021, is that date now firm? Or could it happen sooner if the SABIC transaction closes?
Oh, let me, first of all, as His Royal Highness, the Crown Prince, Prince Mohammed, highlighted earlier, that we are committed for the IPO. His Excellency, the Minister of Energy, Industry and Mineral Resources also said that we are committed to the IPO. So the government is committed for the IPO, for sure. It is about timing. Now, the talk before, the discussion before that, it would have, the IPO would have happened.
Second half of 18, right?
The second half of 2018. In the first half of 2018, we talked about acquisition of major stake in SABIC through a public investment fund. And these two cannot go concurrently. You cannot list while you are going through a major acquisition. The acquisition makes a lot of sense for us, and we need to do it right now because we put a strategy of shifting 2 million to 3 million barrels of crude to chemicals.
The kingdom has taken a lot of steps to bring in foreign investors. The recent murder of Jamal Khashoggi has dampened investor sentiment. What is your message to foreign investors?
Well, I think there is a lot of investment that is coming in into the kingdom. During the FII, we signed $34 billion of worth of investment with our partners. Tomorrow you will be attending our in-kingdom total value add ICTIFA program forum. And we are signing more than 30 deals worth $27 billion. So if you put the two together in less than 2 months, more than $60 billion of agreement and investment that were signed between us and our partners.
So you're not worried about any longer-term damage from the murder of the journalist?
You will see tomorrow, hopefully through in-kingdom total value add, more than 3,000 participants, more than 150 CEOs from in-kingdom and out of kingdom, 80 CEO from out of Saudi Arabia, out of kingdom.
Let's move on. The crypto crash of 2018 worsened over the weekend with the Bitcoin falling below the 3,500 mark. The cryptocurrency lost 33% past week and 75% this year. Adam Hay reports.
Price continues to be under pressure. If we look back a year ago, remember the back end of after Thanksgiving when a lot of people signed up for new Coinbase accounts, there isn't any signs that that's really happening this year. You know, the landscape has completely changed in terms of the appetite for cryptocurrencies, and there's still the underlying kind of struggle that a lot of people have even after the big price declines that we've seen. So it looks like it's a tough end to what's been already a very tough year for the cryptocurrency space, and no real sign of any sustainable relief at this point.
The government has said that it will infuse the next tranche of capital into public sector banks by the middle of December. Nikunj Johri joins us with details on that. Nikunj, this would pretty much be the end of the package from the government side?
Right. This would be the last tranche of capital infusion of the 2.11 lakh crore recapitalization plan that was announced by the government last year. And the government will infuse about 42,000 crore rupees in public sector banks by December 15th. This capital will help public sector banks meet their regulatory requirements, and big banks like SBI and PNB may not get more capital from the government in this tranche or this financial year. Besides this, the government also expects about 4 to 5 banks that currently come under RBI strong corrective action framework to come out of it, and these 4 to 5 banks, according to a senior government official, have shown tremendous improvement, and their NPAs have reduced. The CASA and provisioning coverage ratio has also improved. So the government hopes that 4 to 5 banks will come out of PCA, and the final call will obviously depend on the RBI.
Nikunj, we'll leave it there. Thank you so much for joining us today. On that note, it's out of time on the show. Thank you so much for joining us.
Lots more coming up on Bloomberg Quint.